Friday, September 15th, 2023, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at silver. It looks like silver industrial demand in China is skyrocketing. We also had some Chinese economic data today, and they surprised on the upside. Am I cheerleading for China? Of course not. I just want to look at how things in the world's second biggest economy is going to affect us in the West. And I think it's doing so, of course, especially through the new BRICS expansion. Am I a cheerleader for the BRICS? Some people seem to think I am. No, I'm just an observer of things, and I try to help people understand what's going on and how it will affect their financial position, especially here in the West. Of course, I'm in the UK. A lot of you are in the US, Australia, Canada. And yeah, we need to go past this Hegelian dialectic of us against them. I think we need to look at what's really going on the ground in the economy. And of course, you can't trust a lot of the economic data, not just in China, but also not in the US, not in the UK, as we've seen with the CPI, which they basically changed the history of since 1949 in the UK. So that's what we're going to look at. We're going to focus on silver today. And yeah, we are a little early today, Rudy and I. We got up an hour earlier. And why is that? Well, I have an appointment at the eye clinic for a second checkup for my right eye. It feels a lot better. The first checkup went really well. And I'd like to thank all of you for your kind messages about my eye. I had an operation for glaucoma, but I think it went well. I just need to rest in that I can't play golf for the next few weeks, but that's not the end of the world. So there's a lot of talk, of course, yesterday about this premium that one sees right now in the Shanghai Gold Exchange, which is a physical exchange, and also in the Shanghai Futures Exchange as pertains to silver, which is a futures exchange. But what you need to understand is that one thing about the BRICS and what they're trying to build, I think, and I could be wrong, is that, yes, they want to have alternative commodities markets to the Western markets, i.e., let's say COMEX and the PBOC in Chicago, LME. They want to be able to be outside that system. But I think one thing they've learned is that when you let your commodities markets, futures markets, become too leveraged, too much of a paper game, you kind of create a lot of problems for yourself. And I think this is something that they consider, and that's why the Shanghai Gold Exchange, the Shanghai Futures Exchange, which is a different exchange, they mainly trade physical. It's not like COMEX. They're real physical markets. And I think that's one of the main reasons why the prices in the Far East, in Shanghai, and even in Hong Kong now. Hong Kong now is using the Shanghai price as a reference. I keep in touch with someone in Hong Kong through X or Twitter, and he tells me that up until recently, Hong Kong, all the prices were set off the London and New York price, and he's upset now because he's having to pay a lot more for his gold and silver. So that's how it happens. And it creates, of course, an arbitrage opportunity. And what's an arbitrage opportunity? Well, what you do, you buy gold in the West, you ship it to Hong Kong or Shanghai, and you sell it for RMB. That's the thing. In China, you can sell gold. You can bring gold in and sell it, but you have to sell it for the local currency. You can't do it for dollar. which I guess makes sense. I mean, when you ship gold in to the UK, if you sell it here, you can probably sell it for dollars, but I would sell it for pounds. But that's the way it works there. And the other thing I wanted to say today about gold and silver is that it's not just about the price, the fiat price, even though, of course, it would be nice if gold and silver were valued more fairly, in my opinion, if they had really real price discovery. And why is that? Well, because I think it would give, of course, more flexibility to the owners of real gold and silver to exchange maybe some of their gold and silver for assets. But I think that will happen one day. So what I'm trying to say here, yes, you might want to trade the paper gold and silver, but that's a game that's very difficult, I would say. Only the very few ever make consistent amount of money. And I do realize there's a lot of adverts out there on the internet about Forex trading, any kind of trading. What do I say about those adverts? Well, you need to be careful with that, I would say, because if those people who profess to be able to help you to make thousands of dollars or even more every day from trading, if they were really good at it, they wouldn't be doing that. So beware of that. Yeah, and you can try to do that for gold and silver, but I think the most important thing about gold and silver is that you have some physical, especially in these rocky, turbulent times. I'm beginning to think we are near some kind of Soviet-style collapse, but not in Russia or China, here in the West. And I think people are starting to wake up. And for example, we went out this morning, Rudy and I, and it was just after 6. And I saw someone I know that works in a golf course near here. And I'm not going to say his name or anything, but he used to drive into work. And he was riding a bicycle, and I didn't think much of it. And we were talking. He wanted to see Rudy. Rudy's a popular dog around here. And then he said to me, I'm going to have to sell my 2 cars. I had to sell my 2 cars because of ULEZ. I'm having to come to work on a bicycle. And he said the cars that are ULEZ compliant, really hard to get and really expensive. So I think people are waking up. I recommend really, there's a great video that Neil Oliver here in the UK did. I'm going to put it up in the cards. He's even talking about inflation. He knows what inflation is, Neil Oliver. He's on GB News. And he has his own YouTube channel. And he's talking about a revolution, but his revolution is a revolution in thinking. And I think gold and silver are part of this revolution. And what do I mean by that? Well, gold and silver are the alternative to the current system of debt and fiat currency. Yes, there will always be debt, but under the current system, debt becomes like overwhelming. And I think that's what I'm trying to say. Gold and silver is not just for trading. It's for having, for a rainy day. And I think we'll be lucky if we can have some still after the dust settles. It might sound a bit pessimistic, but yes, that's why I keep telling people, live within your means, try to pay off your debts. They're going to do everything, the powers that be, to make sure that you're destroyed financially, because they don't want people self-reliant. But as I said, I think they're going to fail, and so does Neil Oliver. So highly recommend that. So back to silver here. What's going on in silver in China and the Chinese economy? Well, by Xiaojun or Oriental Ghost on Twitter. This is what he said today. So silver industrial demand is skyrocketing in China. This is the main support for the significant rise of RMB silver. And he posted a story from CNBC. Asia markets rise ahead of key data from China. The other thing he noted here is that Shandong Zhaoquang is the largest silver bar sales miner on JD.com and announced today that it is out of stock. After check, it has been found that all of its vaults across China are out of stock. So JD apparently is the largest online shop in China, according to Oriental Ghost. So the price of silver, as you can see, is continuing to rise on the Shanghai Futures Exchange, traded up to 25.65 equivalent in US dollars. Price of gold as well is now at 2,045. So approaching that 2,070 equivalent in dollars. Of course, here they trade in renminbi, these contracts, but he's using the exchange rate to translate the price. And First Majestic as well, interestingly, one of the big silver miners, they've announced that they're opening a 100% owned and operated minting facility, First Mint LLC, and they plan to sell investment grade fine silver bullion directly to customers. I think that's a great idea. They're bypassing the banks. They're going straight to you, because I think a lot of the miners, what they do is they sell their production forward through the futures to the banks, and they hedge. But First Majestic is actually becoming a mint. I mean, that's really interesting, I think. And so what about China? What's happened to China? Well, the other thing that the Chinese did yesterday, not today, is that they lowered the Chinese central bank, I guess, lowered the reserve requirement ratio for their banks. And of course, that's stimulating for the economy. Banks can keep less reserves and lend more, but they lowered it to 7.24%. So that means they have to keep 7.24% of all the deposits as reserves. And you might think, wow, they're desperate. But I would say they still have a lot of room, because guess what the reserve requirement ratio in the West, or at least for the Federal Reserve, is? It's 0. So I would say the Chinese banks, there might be some out there that are in trouble, but they're not as highly leveraged as the U.S. banks. So we had, as CNBC says here, Asia market rises as China August activity data largely beat expectations. So yeah, we've been hearing, of course, for the last month and a half or so, that China is falling into deflation. Their economy is going to collapse. And that's despite the fact that their GDP is around 5%. So we had industrial production that rose to 4.5%, as you can see here, from 3.7. It came out higher than expected. Retail sales in China rose from 2.5% in August. In the previous months of July, and in August it rose 4.6%. Again, above expectations. And Chinese unemployment rate, that's dropped slightly to 5.2. I know a lot of these numbers are probably tinkered with, but aren't the numbers in the West tinkered with? So, anyway, so things are getting really interesting. And we do have some, of course, news from Europe. Yesterday, the ECB surprised everyone. They raised rates by 0.25%. They were expected to keep rates unchanged. The headlines in the mainstream media said ECB raises rates to record levels. Yes, it is record levels, because the ECB has only been around for about 25 years, and they've been keeping rates historically low. But if you go back pre-ECB to the legacy central banks, 4.5 or 4.25%, wherever they are, I'm not sure, is still a very low rate. I remember trading Italian 3-month futures, 3-month interest rate futures, where they were in double digits. I remember the German 10-year yield trading way above 7%. So don't be fooled by these headlines. This is not unusual that rates are at a 4 handle in Europe, and I think they'll go a lot higher, and they'll go a lot higher in the US and the UK. So enough of that now, then let's quickly look at the markets this morning. So as I said, Rudy and I are early today, and it's 7:30 a.m. London time. So spot gold, of course, dropped yesterday to just around 1900, and that was after, it wasn't after the ECB surprise, it was more after the US data, the PPI, retail sales. They were fairly strong. I noted that Rafi Farber in his newsletter said that retail sales look strong because people are having to spend more to buy basic necessities, so it makes the number look stronger, but it's not a real sign of a healthy economy. And I saw that the big fund managers like BlackRock, which is the biggest in the world, and also Amundi, which is the biggest in Europe, they expect a recession very soon for the US. So there you go. So anyway, gold is right now trading around 1919. We're right near the highs here. The low has been 1910. So we're up about $8 or 0.5%. Silver, I think it got down almost to the low 22s yesterday, and which was amazing because the Chinese silver price, dollar equivalent, was $3 higher, which is massive. So it's not surprising that this morning silver is back up above 23. We're at 23.05, up 41 cents, almost 2%. High's been 17, low's been 22.60. So as I was talking about the arbitrage opportunity, the other way you could arbitrage this is to sell the gold and silver in China and then bring it back, buy it back, sell it in China at a certain price and to the West, and then you can buy it back cheaper here. But I think that's not going to happen because the West, most of the people in the West don't see gold and silver as an important asset. Anyway, what about the stock market? Well, the Dow futures is up 68, NASDAQ 100 is up 33, and the S&P is up 8. To the currencies, sterling is up slightly here, up about 0.2%, 124.30. The euro as well is up 0.2 at 106.62. The dollar is unchanged versus the yen at 147.52. And the dollar yuan, dollar's down about 0.2% at 727.44. Let's check the ruble, dollar versus the ruble. Dollar's up 0.75%, fairly strong. It's trading at 97 versus the ruble. We're going to check the other currencies here now. We got the Aussie dollar up 0.5%, 64.70. The dollar is down slightly versus the Canadian dollar at 135.02. The Kiwi dollar is up 0.4 at 59.34. So now to the commodities, and I've noticed earlier today that WTI crude, or the US traded crude, is above 90, which is fairly significant. I guess that's the high for this year. We're at 90.34, up 0.75%. Brent is just below 94, up also 0.75%. And platinum this morning is up $4, trading at 915. And copper, high-grade copper, that's up almost 0.2% at 384.66. So yeah, I still believe commodities and hard assets are going to continue to do well in this environment. And paper assets like stocks and bonds are going to continue to underperform. And that's even if we have a recession. I don't see bonds doing well. Bonds are not what they used to be. We're not going to see bonds like in the first 2 decades of this century, where when you had a recession or a slowdown, people would buy bonds and drive down yields. I think that's changed. It's going to be more like the 70s. It's more of a stagflationary environment. So with that, let's just quickly look at where the 10-year yield is. Well, we're at 429, so basically unchanged. It looks like it wants to creep up back above 430, the 10-year yield. The UK gilt market is closed still, so I won't update that. And there are some negative news, I guess, in the UK in terms of real estate. Yesterday was a headline here in the FT, UK estate agents gloomiest in 14 years as house prices and sales fall. So that's not good for them. It's good if you want to buy a home and you've been saving, especially in gold, a home in the UK. But there is some good news, so to speak, in the UK from yesterday as well. It says UK cash grows for the first time in a decade. So the use of cash is grown, which is a good thing. But if you read the whole story, it still points out that debit card usage and contactless usage is increasing as well. And I think we need to do things that we believe in and just not comply. Try to use as much cash as possible. Get out of the system as much as possible. Buy physical gold and silver, real money. Am I telling you to do it? No, that's the way I see it. Don't play into their schemes. Yeah, don't borrow for frivolous activities. Try to keep borrowing to a minimum, because when you're borrowing, you're exposing yourself to these people. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.